Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be looking into how to trade the Swiss franc. The Swiss franc, known amongst traders as the Swissy, is one of the major currencies, with the USD Swiss franc being the 6th most traded currency pair. It is considered to be a safe haven where investors will often buy the currency in times of risk off or market uncertainty. The Swiss National Bank decided to artificially peg the franc at 1.20 against the euro in 2011 because the Swiss policymakers wanted to stop the franc from being so strong. It was hurting its exports. However, in January 2015, the SNB suddenly severed this artificial cap without fair notice. This sent shockwaves through the market, and where the franc currency spiked in value, the euro-Swiss franc plunged from the artificial cap of 1.20 to 0.85. Many investors, traders, and institutions were caught out, with a broker named Alpari going bankrupt. Some traders had their accounts blown, and they went into negative equity due to this unprecedented move. Since then, the currency has stabilized, and where the USD Swiss franc pair is nowadays less volatile compared to other currency pairs, and this of course makes it difficult to trade from a technical standpoint. Things that affect this pair are decisions by the US Federal Reserve and the Swiss National Bank, and their respective gross domestic product estimates, unemployment data, industrial growth figures, and national debt. Despite previous turmoil with the currency, the bottom line is that investors continue to see the Swiss franc as a safe haven currency, and this has been borne out in the markets at the time because of the coronavirus epidemic. While the risk associated with trading this currency from a historical standpoint would be that the SNB have proven to be ruthless and unsympathetic when setting policy decisions, and clearly they do not want a strong currency. Nevertheless, the markets have decided to heavily buy the Swiss franc, which is at a 16-month high at the moment. The USD Swiss franc pair decreased 0.62% on Friday, January 31st from the previous trading session. In example A, which is the daily chart of the USD Swiss franc, going back to April 2019, the pair has, for the majority of this period, been stuck in a sideways action after rejecting the high of 1.02 at position 1. This keeps in line with our notion that this pair has been fairly steady throughout this period. We can see clear support and resistance at positions 3 and positions 4. However, when it comes to position 5, there is no bounce higher from the support line back up to the resistance line. We simply see price action fairly muted, and then having a second attempt to pierce through the support line at position 6, which was short-lived. This bullish candlestick and the more convincing pierce of the support line at position 7 falls into with our theory that the Swiss franc is being bought as a safe haven currency at this time. And therefore, traders should be looking to support this line, subsequently becoming an area of resistance and with possible continuation to the downside, perhaps to the 0.95. Example B is a daily chart of the Euro-Swiss franc pair. Having looked at the previous chart, it is fairly straightforward to see what is going on with this pair. We have an overriding move lower with this pair to position 1, and with the support line has subsequently become a resistance line with no sideways price action at position 2, and we're at position 3, price action has continued its move lower and reached the support line, which temporarily became an area of resistance before being breached and then moved down lower. Therefore, this chart backs up our beliefs that we should be looking for opportunities to buy the Swiss franc in the short term. Perhaps during pullbacks, because we do not want to be entering trades, for example, the two pairs in question, which under any other circumstances that the current coronavirus outbreak might be considered to be oversold. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.